Happy New Year. Here's to a prosperous 2024. Greetings, I'm Brett Carleton, coming from the offices of Heritage Wealth Management. I want to take a minute with you and let's step back to January of last year and let's just think where we were. We had just come through a bear market in the equity markets here in the United States, the worst market in bonds since the Great Depression. The Fed was in the midst of raising interest rates the fastest they have really in the history of the Federal Reserve. We were still dealing with multi-decade high inflation. We had war still in Europe. The general consensus among economists was that we were going into recession. So it wasn't a very good setup really for investors that you would think going into 2023. And then on top of that, we had in the spring, we had 3 bank failures. Which really caused quite the stir in equity markets until the FDIC stepped in and essentially insured all the depositors, which was really a first for them. But that seemed to calm things down. But while all that was going on, it sort of went unnoticed to the general population. But in late 2022, ChatGPT was introduced to the public. And it didn't really catch on in a big way until the spring and the summer of last year. And the excitement and the euphoria around artificial intelligence, AI, really kicked off, and we saw it in the stock market with 7 companies that became known as the Magnificent Seven. NVIDIA, Apple, Microsoft were some of the key ones there. But this group of 7 companies, at one point, at the end of the third quarter, were responsible for 80% of the total return in the entire S&P 500. So it was just phenomenal how everything dealing with AI just absolutely took off. But that wasn't the only thing last year really drawing or grabbing the attention of Americans. The Taylor Swift concert series, for the first time ever, had gross ticket sales over $1 billion. And I think what that really just illustrates is this trend that we have seen since COVID, or the reopening after COVID, of consumers wanting experiences as opposed to stuff. And that trend continued in a big way. We had record air travel last year. Hotel occupancy is up near all-time highs. And I fully expect that trend to continue as we go into this year. I know we're seeing a lot of economists are talking about slowing consumer spending and a slowing overall economy. But I think consumers are still fairly well positioned financially to continue to spend. Another big milestone that we've hit here in the fourth quarter was total employment is back above where it was pre-COVID. So we now have the largest working population that we've ever had in the history of the United States. So employment is always good for the economy. The other thing that really began to happen third quarter, especially into the fourth quarter, was the belief that the Federal Reserve is done raising interest rates. And the expectations are now that they will begin to lower interest rates starting as early as March of this year. And that will be a positive because it makes the cost of capital lower and it tends to spur on investment, especially corporate type investment and things. So that could actually have some real positives as we look out into 2024. Another area that was really exciting to see was in the fourth quarter, investors moved away from just buying these Magnificent Seven companies to really spreading out and buying the entire market. International markets, for the first time in a while, really performed well. These real estate investment trusts that were absolutely clobbered after the COVID closures actually led all categories. Small companies did exceptionally well. So the breadth of this rally really expanded. And my expectations would be, as we move into this year, is that we will see that continue. This is where the real value is in the marketplace. These Magnificent Seven and companies like this have gotten to be very expensive. And a lot of the market hasn't participated in this rally, so that's where I would expect to see opportunities as we move forward. And we are well positioned in that space. So something just to look forward to as we move forward. But I think as we talk about 2024, the big news story is going to have to be around the presidential election. Typically during presidential election years, the market tends to be more volatile through the primary season. And once the 2 candidates are nominated, things tend to calm down. Then once the election is resolved, the market tends to rally, and election years tend to be historically be a good year for the equity markets. But I think we can all just expect to see probably more negativity in this election cycle than we have in a while for many reasons. And hopefully, as we get through the through this cycle that we'll have two candidates at the end of this, and we'll just have to see how all this plays out. But I'll talk more about this later because it's still so early in this cycle. But the thing that we have to remember is long-term, goal-focused investors, that things like this are going to cause short-term blips in the markets. But just think if we'd gone back last year and made investment decisions based on the economic news. We would have gone completely to cash. So we will stay focused on our plans. And as we move through this year, we'll just keep you abreast to what we see happening with all these. So, and just a final parting thought. All psychologists say the more exposure a person has to media, the more negative their outlook is. So of course we must stay informed. But I would say don't sit with the TV just running continuously, because that's going to just wear you out this year. So here's to a wonderful and a prosperous 2024. And if you have any questions or comments that you'd like to add to this, please reach out to us. Otherwise, thank you for your time today.